What's up guys, and welcome back to the channel. Today I want to make a video that I've been meaning to make for the past few weeks. This is in response to a lot of requests that I have gotten for my thoughts on this, but it is also a response to a lot of negative comments that I have got over the past 2 months. So in this video I will be looking at Redbox, ticker RDBX, a stock that I first mentioned on this channel and on Twitter at only $3 that ran up as high as $18. That's a 500% gain. But as soon as I mentioned risks and that people should do serious due diligence, an avalanche of negative comments came my way. Now the stock is being hyped, and I do not believe that the hype is justified any longer. When I first spoke about this stock, there was a big opportunity, but now I feel that there is far more downside than possible upside. But can RDBX stock skyrocket one more time this week? In this video, I will look at the catalyst that people are saying will drive this stock, and I will give you my conclusion on just how low I think this could drop over the coming months. This video has taken a lot of time and effort to prepare today, so if you appreciate the effort, show your support. I'm aiming to get 300 likes on this video, but I do expect a lot of dislikes too. So if you find any value in this video, then help the channel by liking. And remember, this is not financial advice, I am not a financial advisor, but if you do enjoy this content, then subscribe to the channel if you haven't already done so. Let's start with the very latest news that is driving this stock and go from there. So as of tomorrow, Redbox stock will be added to the Russell 3000 and Russell 2000 index. Now I'm seeing a lot of comments about this being a major catalyst for RDBX stock and that this is a big deal for the stock. Joining the major indices always provide a big boost for stocks that will automatically be added to the appropriate growth and value indexes, which brings great visibility within the institutional investment community, but also trading volume due to being on the index. So it is incredibly important to understand why a stock gets added to these indexes in the first place. The Russell 3000 is made up of the 3,000 largest US companies, representing about 98% of the entire market. The Russell 1000 index is made up of the top 1000, while the Russell 2000 is comprised of the bottom 2,000 small cap companies. And these are determined by market capitalization. The reason that Redbox stock is being added to the Russell 2000 and 3000 indexes is because of the company's market capitalization, which puts it in the top 98% of stocks on the market. The Russell rebalances its index yearly in the last week of June, and Redbox was not on the index prior to this because the company only went public late last year. So this being talked about as a major catalyst is simply not true, unless of course you want to say that 98% of the market has the exact same catalyst. And saying that this will bring a massive increase in volume is not true either. Perhaps for stocks that have a very low trading volume, this will bring an increase, but Redbox has an average trading volume of 21 million, so this will make very little difference overall. So will RDBX stock go up on Monday because of this? No, this makes absolutely no difference to Redbox stock. And anyone saying that this will make a major difference is simply using this to pump the stock. My next point is very simple. The main story is that this stock will squeeze, and when this stock does, it will be like the next AMC or GME. Remember those short squeezes? GameStop was back in 2021, which went from just a few dollars to over $400. And AMC followed this a few months later from just a few dollars again to over $70. Now I spoke all about the short squeeze in my first Redbox video back last month, and I originally called this out on Twitter when this stock was only $3. I want to point out why it is so important to follow me on Twitter if you're not already doing so. I noticed the stock gathering a bit of attention and gaining a few percent on the day. As most of you know, I have a full-time job. I don't have time to make videos during the week. But once I got a chance to take a look closer at this, I seen that there was a huge possibility for a quick profit to be made, and after liking what I seen, I tweeted about it. As it says here, a very nice looking setup here at Tough Built. Could this go on a Redbox type of run? 26% up today, and I would not be surprised to see a 100% gain here in days, and even more in the very near future. And then what did we have? This stock was up 95%, so I had to ask the question if anyone jumped in on this stock yesterday evening That is a 100% gain in less than 24 hours. If you've seen this yesterday and you jumped in on this, drop a comment and let me know. But look at this. This tweet was put in front of just over 2,300 people, of which 30 people read this tweet and only 4 liked it. That is 99.8% of people missed out on this play, which is crazy. But this is a regular thing. I don't tweet all day long. In fact, I only tweet a few times a week. If I have something important to say or a new video released, that's about it. But look here, I tweeted about Redbox back in April when nobody was talking about this stock either. And then not once but twice this made huge gains, hitting over $15 earlier this month. Again, so many people missed out on this, so stop missing out. That's nearly a 400% gain from the time I posted this. So stop missing out. This costs you nothing, it's completely free. Hit the like button, subscribe to the YouTube channel and follow me on Twitter. Let's make those gains together in the coming months. In fact, Redbox actually went as high as $18. So the stock has now dropped nearly 50%, but despite this drop there is a lot of people adamant that this stock will squeeze. Personally, I think it's over for this squeeze. It has already happened and now it's in its decline. But according to Ortex data, this is still very much on. And so many people are clinging to this. But one thing that is needed for this theory is volume and interest in the stock. And this is something that has been dropping for the past week. The message volume on StockTwits has dropped from over 70,000 to just over 17,000. The stock is no longer trending or ranked among the top most active or top most new watchers. Even the RDBX subreddit is gone quiet, with talk of the Russell inclusion being the only real updates here. Now some will say that this is the calm before it takes off again, but I think the squeeze has already happened and now it's over. That is my opinion, but look at the RDBX stock price. This was less than 180 just a few months ago and it spiked up to $18. That is incredible. That is a 1000% gain for those who got in early, and the majority of them are probably already gone. After all, this stock was at one point one of the most traded stocks in the world with daily volume of around 200 million. On Friday, this had daily volume of just 5.5 million. Which leads me on to what is next for RDBX shareholders and what will happen to RDBX when the company is acquired by Chicken Soup for the Soul. Redbox stockholders will receive a fixed exchange ratio of 0.087 of a share of Class A common stock of Chicken Soup per Redbox share. So first of all, let's think about this from a logical point of view. For every Redbox share, Redbox shareholders will receive 0.087 of shares of Chicken Soup. So that means that shareholders will get 1 share of CSSE stock for every 11.5 shares of RDBX stock. Redbox stock is currently $9.75, so 11.5 shares of Redbox has a value of just over $112. And in return, shareholders will receive 1 CSSE share for this. CSSE stock is currently trading at $7.79, so this does not make sense at all for Redbox shareholders, but it actually gets far worse than this. So if this deal is so bad for shareholders, why would management even consider agreeing to these terms? Now this is something that I spoke about in my previous video, and I will look at the financials in just a minute, but as it says here, the risk of bankruptcy over the next 12 months is very high and investors should be concerned. Now I feel this is somewhat of an understatement of the risk of bankruptcy. This risk was not high, it was pretty much a certainty. And that much was discussed in the going concern disclosure made by management in their recent annual report. So let's look at the Redbox report to see exactly why management would agree to such a deal for shareholders. This should help everyone to understand the risks involved here, the position that the company is in, and how the stock has ended up being so heavily shorted in the first place. Looking at the company's balance sheet, we can see that they have total assets of $378 million and total liabilities of $440 million. This means that Redbox is in negative equity to the value of $62 million. To make matters worse, long-term debt is by far the largest liability, while goodwill is recorded as the biggest asset. To put this simply, this is a terrible balance sheet. This coupled with the fact that revenues have been dropping dramatically year over year, down 66% from 800 million in 2019 down to 280 million in 2021. This is made even worse because costs have not even halved. What was once a profitable business is now a huge loss maker. Losses of over $140 million for 2021. And we can see here in the notes to the accounts just how bad things really are. In January, Redbox borrowed the remaining availability under its revolving credit facility, and on the 1st of April 2022, the company announced a reduction in force of 150 employees, and management have highlighted the level of the problems that they are facing. There is substantial doubt about our ability to continue as a going concern, and this could materially impact our ability to obtain capital financing and the value of our common stock. If we cannot continue as a going concern, our stockholders would most likely lose all or most of their investment in us. So in a way, the deal makes sense for Redbox, but how does it make sense for Chicken Soup? They are essentially absorbing a high level of debt in what feels like a massive user acquisition deal. And I still do not see any good ending to this story. I've compiled this very simple spreadsheet from both companies' latest financial data. As we can see here, Chicken Soup have a total of $270 million in assets and total liabilities of 196, which gives Chicken Soup total equity of just $73 million. Assuming that nothing was to change in the coming months, we can see that by acquiring the assets and liabilities of Redbox, the combined company would have total assets of $632 million, total liabilities of $660 million, meaning that the combined company would actually have negative equity of $28 million. Now, this is a very simple spreadsheet using very simple data from the company's latest financials, but personally, I would be staying well clear of this company. If you believe that the short squeeze is still yet to happen, then go for it. But at Redbox stock current price being close to $10, I feel that this could eventually drop around 80% before this merger takes place. So I will be staying well clear of this stock. So guys, before we wrap up the video, what do you think of Redbox? Will you be investing in this stock for the short squeeze, or do you believe in the long-term potential? Drop a comment and let me know what you think of this company and if you enjoyed my video. I do recognize that this will get a lot of dislikes due to me talking about the stock possibly dropping about 80%, but I would greatly appreciate if you could smash the like button if you did enjoy this video. Of course, this is not financial advice, I am not a financial advisor, and please hit the subscribe button if you're new to the channel, or follow me on Twitter and I'll catch you in the next one.